Let's move on to John Michael's question.
Hey, John Michael, friend of the show.
He said, I stopped paying extra on my mortgage because it is at 2.1%. And now I take that extra and I put it in a savings account paying 3.5%. When or do I ever move that money and interest earned over to my mortgage?
Yeah, so a lot of people are in this situation right now. If we bought homes in the past couple of years or we refinanced in the past couple of years, we recognize that the mortgage cost on our homes is lower than the interest we are earning on our savings account. John Michael says he's earning 3.5%. I think some savings accounts now are even paying over 4%. And so you're thinking mathematically, okay, this must be what that means. So long as that arbitrage exists, I should keep the money in savings and then keep paying the minimum on my mortgage. But as soon as it shifts, as soon as my mortgage rate is higher than my interest rate, well, then I should throw all the money at the mortgage. Is that the right way to think about it? Is there something he's missing?
And look, I feel a little bit of a, we'll call it an advantage because I know who John Michael is and we've met. He's done the studio tour. The guide to this, the answer to this, and you know I'm going to do it. I'm going to hold it up. I'm going to make the cool sound, the financial order of operations.
Yes, sir.
Because, look, paying down, because we do have an arbitrage situation. We know that you have a 2.1% mortgage. Cash is paying more than 4% if you put it in the right place without the risk. There is, you're like, whoa, that's a great opportunity, but there's a balance here. Remember, there's two components here. There's getting wealthy and then there's keeping your wealth. And that's what the financial order of operations tries to maximize that entire journey so that if you don't have your emergency reserves, if you don't have the foundation of your investments with your Roth and your retirement plans through your employer and the hyperaccumulation and pre-funding all your kids' education and other goals, then you don't get to move on to paying off the 2.1. But however, I don't want somebody who's approaching the threshold of retirement, post 45, meaning you can actually see the runway of the future ahead of you. And you got to figure out, how do you glide this thing down and how do you keep your wealth? How do you minimize the risk of the long term? Because you want to enter retirement completely debt-free. You're going to take all those components, and that's where step number 9 of the financial order of operations might say, hey, look, if you've already been saving and accumulating and you have the build the wealth by saving and investing 25%, but you can spot your retirement threshold in the near, not too distant future because you're over 45, now we're at the point of it might be okay to pay off the 2.1% interest rate, even though you can make more in cash. So I will tell you my own situation. Y'all know I have pretty much paid off my house.
Very
Me
close.
and Bo, because I told Bo I was going to be completely debt-free by age 50. So I am so close, but then this whole arbitrage situation with interest rates happened. And so what I've done is I've quit hyper paying down my mortgage. I'm just now rounding up my monthly mortgage payment, a few extra $100.
You still got to get a little bit extra.
I'm not a minimum payment type of guy. I'm just not. That is not my mentality on anything. Even though I know that those few $100 extra are not getting maximized, they are working towards that component of lowering the risk so I can keep my wealth. That's the way I would look at it, John Michael, is use the financial order of operations as your marker guide to kind of know where you are in the journey, but then try to figure out how you balance keeping your wealth as you're in that phase of success.
Love it. And I'm just going to, I'm not going to throw it out there. That's good. I'm going to throw it out there. If you're someone who's sitting on cash and you're not earning some of these rates that look, we're recording this in February of 2023. So we know that interest rates can change. If you're not out there getting at least like 3.5%, 4.5%, that's available out there in the marketplace without a whole lot of work. So make sure you command your army of dollar bills. If you're not getting those savings rates, ask in the chat. They'll tell you where to go. Find places to park that cash because every little bit helps a ton over the long term.